Hi, this is Alkemy with the Bulletin Board Heroes, the weekend edition here at Zach's Traders Cafe for Sunday, the 14th of April. Starting off with the FTSE 100, which closed the week well, just below the 8,000 level, but obviously the geopolitical cat has been thrown amongst the pigeons since then. That leaves us looking for the potential support zones, 78.80, which is basically 2 to 3 week support for this market, and below that, then there's a risk of a fall to the floor of that rising trend channel from December around 77.80, but we may even get away with just a bear trap below 78.80 and then back up again. Top of the channel there up to 81.70, which is that resistance line there from the end of the year. But at the moment, I suppose you could say the situation rather wide open. Moving on to the DAX, and here the market struggling to stay within that rising trend channel from the beginning of October. The potential support here, the 50-day line, 17,700, and so one would expect that to be touched early tomorrow, even if the market then rebounds from there. Below 17,600 risks a move down towards that gap there at 17,200 from back in February, but hopefully that scenario can be avoided and it'll just be about bouncing off the 50-day line. If you're looking for a buy trigger, a technical buy trigger, then a break of 18,100, and that April resistance line there would be the potential catalyst for a move to the top of the rising trend channel from the end of last year at 19,400. But obviously the upside at the moment appears relatively less likely. Onto the Dow, which was bad anyway, even before the geopolitical situation started flaring up. Here we've broken down below the February support there, 38,500. That leaves us really looking for the 37,000 area, which was the January support, which obviously would not be a great look, given that we'd basically given away all the gains of 2024 to date. Just a chance, I suppose, if late December, early January resistant at 17,800 coming into play, but given how poor the price action was last week, and also with that failure at RSI 50 that we had over the last couple of weeks or 10 days, let's say, then it does look as though we'll have a move towards that 37,000 area. On to Bitcoin, which has had its own issues as well. The rug pulled, certainly pulled over the weekend, and here we were expecting below, say, 65,000 to maybe retest the 60,000 area, and I suppose what we've seen now is a reflection of that fear. The 50-day line there at 66,300 or 400 actually to be more precise, and that would be the minimum requirement for an end-of-day close through that level to take us back to the 70,000 plus zone. But obviously we've had two main failures above 70,000 after that peak that we had early in March towards 74,000. So the main thing here is to hope that this market will find support at and above the 60,000 area. Below 60,000, risks move down to 53,000, which was the mid-February resistance. On to gold, which I suppose could actually benefit from the nightmare that we're seeing at the moment in the Middle East. Here we've got a rising trend channel which has been in place since the middle of February, and here you can see that progress within that relatively narrow channel has been going well. Top of the channel there heading for as high as 24.80. We're looking for that as soon as the end of next month, while we remain above the recent support around 23.40. We do break back below 23.40. The next level down is around the 22.80 level, which is one of our previous targets. On to oil, which presumably will also be influenced by the latest events. Here we were back to that broken September resistance line there around 83.50 now. Above that, we're looking for a retest of the October resistance of $90 and then up to September, the last September peak at 95. On the downside, which we're not really expecting now, especially after the golden cross last week between the 50 and 200-day lines, then it would be back to the low 80s area, so 80 or $81. But one would expect $83 to hold, and for a further move to the upside. Onto the stocks, and good to see Alkemy improving with an extended base that we've had here since the beginning of the year. The sizzle at the moment is the highest support there for April, which was around 76 pence versus the previous March support around 72. Current situation is we've got that what I call a sideways shuffle above a rising 50-day line. So we had those flat days above a rising 50-day line. Initial target here up to £1.10 as soon as the end of this month. And I suppose if we're lucky, we head up to the 200-day line at 1.15 over the next couple of weeks. Ideally, there's no end of day close back below that 50-day line, currently at 82 pence. If we are going to see a big recovery for the junior miners, helped by the rise in gold, copper, etc., then one of the beneficiaries finally may be Ariana. Here we've got the shares surging through the 200-day line there at 2.25 pence. In fact, you can see that both the 50 and 200-day lines are rising now, which means we're probably a couple of weeks away from a golden cross. The run up to a golden cross tends to be the strongest part of the cycle, and we're looking for the shares to hit the top of that broadening triangle from way back in June 2022 at 4.25 as soon as the end of next month or even sooner. The key here, though, staying above that 50-day line. A nice rebound for Arrow Exploration, and here you can see that looks like we're well entrenched within this rising trend channel from back in February. The sizzle here is the way that on Friday we opened above the sharply rising 50-day moving average and closed at the high of the day. That suggests that we should be able to head up to as high as 28 or 29 pence by the end of this month at the top of that channel, given how strong the rebound has been over the last 3 sessions. Next up is a stock which I don't normally look at, but obviously it's one that has been improving in the recent past. We had a bear trap island reversal, so gapping down in January and then gapping up this month. We're also consolidating with what I call a rising bull flag above a rising 50-day moving average. It's a bear trap. It was a gap to the upside, unfilled gap to the upside, so everything looking pretty good here, solid here. £1.45 is the top of that rising trend channel from January, and we're looking for that well before the end of this month. Ideally, we stay on the right side of £1.20, which was Thursday's support. Expecting Capital Metals to get off the ground again as well. Here we've had a rebound above a rising 50, rising 50 and 200-day moving averages. The 50-day line there at 3.3 pence, and above that, looking for the top of that rising trend channel from last July at 7 pence as soon as the end of next month. A nice bounce for the RSI at and above the 50-day, the 50 level, the neutral 50 level as well. On to CleanTech Lithium, which one would feel looks as though it's ready to rebound. Nice session on Friday. The shares opening at the low, closing at the high. That suggests that we should at least be able to get up to the top of that falling trend channel from back in December at 16 pence, and maybe crawl up to the 21 or 22 pence area by the end of next month. The other point to note is that we stay above the old January support there, 13 3/4, on an end of day close basis. If we do that, that would suggest a proper bear trap rebound is in place there. Genincode starting to revive itself again, bouncing off the 200-day moving average at 7 3/4 pence. We hit our old target there around 8 pence last week, and looking for the shares to hit 12 pence well before the end of this month. The only thing missing is the 200-day line rising. We haven't been above that obviously for a long time back in the early part, basically this time last year. Going on to Galantas, another hopeful beneficiary of the rise in the gold price. Here we hit the initial target there around 15.5 pence. End of day close above that. We're looking for 24 pence as soon as the end of next month or even sooner. 50-day line already rising, so hopefully this will start to have another second wind in terms of the rebound once the 200-day line starts rising later this week. Could resist looking at Helium 1, which has managed to rebound after the last trading, the last RNS rather, that took the shares back from the 50-day line, but we've stayed on the right side of that resistance line there from February. That's around 1.2 pence, and above that, rather simply looking for a retest of 1 3/4 by the end of this month, hopefully sooner than that. Be cautious we wait for the RSI to get back above neutral 50. It's just below that at the moment. Stock that nobody really looks at very much is Huddled, but here we've had an unfull gap to the upside to end the week and a close above both the 50 and 200-day moving averages. The longer we stay above the floor of that gap there at 2.6 pence, the greater the chance of move to 3.6 pence at the top of that broadening triangle from December by the end of next month. Nice price action at Kromek as well, with the shares closing above a sharply rising 50-day moving average, basically both on Wednesday, Thursday, Friday. In fact, that's at 6.5 pence. Initial target, a retest of 8 pence, which hopefully we'll get over the next week or two. Next target up to 10 pence, which is probably the best case scenario target by the end of this month. Landore, another winner over the recent past, and we're looking for this to make progress within a rising trend channel base. That has its peak there at 3.25 pence. We're looking for that by the end of this month on the basis that the shares gapped up on Friday and they gapped up above a rising 50-day moving average at 2.1 pence. So hopefully that's a decent signal there. And the other point to note, I suppose, is the way that we have that January gap down, top of that gap there at 3.2 pence as well. So all roads here pointing to the 3.25 pence area and a gap fill on Landore. Moving on to Oncimmune, and here the position is that we are pushing through a rising 200-day line and the 50-day moving average. They're around 21 pence above that, looking for the top of that rising trend channel base from June last year, as high as 34 pence or even 35 pence by the end of next month. Extra sizzle provided by the way that we gapped up at the end of last month, the floor of the gap there at 18.7 pence, and we were too strong to fill it, so that does give a very solid look to the shares at the moment. Couldn't also resist looking at Premier African, which I suppose after having two fundraisers on consecutive days, one would hope that it's maybe not going to have one for another couple of days. Here you can see that we had a potential rising trend channel based at 0.2 pence. We want to see an end of day close back above that level really to get it back in the swing of that 0.2 to 0.4 pence range. Obviously at the moment things looking rather flat, and the chance of a retest of December support at 0.15 cannot be ruled out before any potential lasting recovery, fundraisers permitting. Star looks decent as well at the moment, with an unfull gap to the upside to end of the week. Here you can see that we've got the rising trend channel base from back in August, 13.25, the initial target 18 pence, perhaps on cue for the end of next month. Another stock that most people don't look at is Tasty, and here a broadening triangle base from back in October. The top of that triangle heading for 1.5 pence, which we're looking for by the end of this month. And the reason for the enthusiasm, the way that by the end of last week, the 50-day line had started to curl up, and obviously the price action of both, the start of the month, and then last week we had two very strong candles opening at the low, closing at the high. So it looks as though somebody's quite keen there. Finishing up with Thor Explorations, where suspicions that the shares were going to deliver a turnaround have proved to be correct. We had those very strong candles there just off the lows from about 10 or 11 pence onwards, and now we've got consolidation and a breakout of the initial March resistance at 13.9 pence, accompanied by the 50-day line rising. Initial target here 17.5 pence by the end of this month, and 21 pence hopefully by the end of next month. There's a gap to fill up to 18 pence from back in October, so hopefully that will be done very soon. That's it for me today. More updates during the week.